Hello, everyone. Welcome to Track C, Omnichannel Transformation. It is my pleasure today to introduce Nick Cranney, who is here from ESW to talk about the impacts of tariffs on omnichannel retail.
Good afternoon, everyone, and welcome to the session on Beyond Borders, navigating omnichannel growth in a tariff-driven economy. I'm just going to spend the next 20 minutes just going through some information, some learnings that we have over the years, and hopefully we'll have some time for questions at the end. If not, just grab me, and we can certainly answer those questions for you. We have a booth at 255, I think, so you can come there and see us. Just before we get started, you've probably recognized from my accent, I'm not from here, I'm from Ireland, so I've got like a natural tendency to talk fast anyway. If I'm talking fast, just kind of wave me and I'll slow down a little bit. I'm very used to it. I work in our Madrid office a lot, and they tend to use the waving down quite a lot when they talk too much. Just a little bit of background before we get started. So I work for a company called ESW. We're a leader in global e-commerce direct-to-consumer. I've been in business officially about 15 years. And we localized every part of the journey for retailers for their international market. So everything from customer acquisition to the storefront to the checkout. We also manage all the logistics, all the trade compliance, import-export, FX, liability, fraud for payments, and then all the logistics and most importantly the returns as well. For me, I've come from a technology background. I've worked in logistics technology for about 20 years, started off in freight containers and tracking. I've been with ESW now for 12 years in total. Focused originally was on building out the platform, checkout, payments, logistics, the full end-to-end. But over the last 5 or 6 years, the focus has been more on product, certainly looking at omni-channel, logistics, returns, and our tax and trade compliance. So just a bit on our session overview today. So we'll just talk a little bit of what I've learned over the last 10 years working with retailers as they grow internationally and the challenge that they've had. How you can use a blend of technology, logistics services, trade compliance expertise to kind of maximize your profits and grow internationally. And then hopefully some informative tips and actions that you can do immediately that will help on that journey. So why does this matter now? Well, it's always mattered. Tariffs and duties have always been a factor of international business. I think, though, we just tended to ignore it. Certainly 10 years ago when I started in this industry, you would just give your package to the carrier, they would take it to the shopper, they would deal with all the duties and taxes, you would kind of ignore that shopper experience, and that was the baseline, that's what everyone did. But since then, the experience has improved quite a lot, and it matters more now because the information is more public. Shoppers are very, very aware of tariffs. My kids know what tariffs are these days, it's never off the news, and we've seen it in the US, certainly. I was in a hotel in Madrid, and they only had Bloomberg as their English TV, and you can see there was panic buying in the US. Shoppers were stockpiling before prices went up. Then there was a little bit of a lull, and I think things are starting to calm down now. But certainly as the shoppers are becoming more aware of tariffs and the experience that they expect, then we have to adjust or we're going to lose business. So I think the key thing that we're seeing right now, certainly since Q1 of this year, is the changes are coming at a much faster pace. There also is much more volatility than ever before. So, normally you'd get a year, 2 years advance notice if a tax is going to change or a tariff's going to change. Now we're seeing it change overnight, and we're seeing it dramatic. It's not just 10, 20%. It could be 140, 150%, which is a complete barrier to business. So not only are companies and retailers struggling to keep up with this, I think actually the customs like CBP and certainly the other organizations, they're actually struggling to keep up with it as well. And then there's the volatility on it. It's going to happen, then it's not going to happen, and it's back on. And that's what's driving a lot of chaos, certainly in the industry right now. I think we've got a bit of a hold until July 9th, and then we're going to see how things happen in the US at that stage. So why are we seeing so much with the tariffs? Well, there's a lot of different thoughts around why, but certainly one of the main ones is that governments want to generate some more income. Certainly here in the US, there's a train of thought that these tariffs will help generate a lot of income to help for the tax bill that's being proposed. We saw it in Russia, I think 6-8 years ago when they were hosting the Winter Olympics. They increased their tariffs, and that was to help pay for the infrastructure for the Winter Olympics. Regulations are becoming stricter. So probably, as I said, when I started in this industry, if you were to send something to a commercial carrier, some basic information, they would be fine, they would process it, you could give them defaults, you could make it generic. But over the years, that's become a lot stricter and a lot tighter. Recently, we saw DHL stop shipping any package over 800, so they couldn't even cope with the change as well. Certainly even in the postal industry, 10 years ago, you could ship pretty much what you want through the postal industry and it would flow through the net, wouldn't get stopped for duty and tax at all. That industry is changing significantly in the last couple of years as well. Again, it's the government pressure on the regulations to try and generate that income. And then today's stream is about omnichannel as well. So not only does it become complex to deal with trade, but if you're dealing with multiple origins or multiple channels, then it gets complex exponentially in terms of deal with the trade compliance of all of that. So what does it mean for you and for your customers? Well, for your customers, it's going to mean, the increased duties and tariffs. It's going to mean you're going to have higher prices at checkout. That's going to lower conversions. What can you do to respond? Well, we'll see some other tips as we go through the presentation. But, it's difficult to bypass tariffs. If you're going to import into the country, you're going to have to pay tariffs. What you want to try and do is minimize and make that as accurate as possible. So the international shopper experience, they expect to see a landed cost. They want to get a domestic experience, even though it's an international shipment. So the more accurate the information you have, the more accurate the calculation you do, you can help bring that price down to lower your risk. It's normally the prices will go up when you don't have good information and you want to increase the price to cover all of your risk. Certainly at customs, we're seeing a lot of friction. So it's new rules to the customs. If you don't keep up and they're not able for it, things are slowing down. And this is frustrating shoppers as well. So one way to overcome that is to have better quality product data. And I don't mean better product descriptions or photos. We're talking about country of origin, where the product was manufactured, a HS code for that product. These are the types of typical data that carriers, brokers, customs want to see that will build a trust with you as a retailer or a brand to be able to allow your product to flow through. And then behavioral shifts. As we just mentioned, we did see some panic buying, things have settled down, but shoppers are aware of everything that's going on right now and they're reacting to that. And so we've got to also be cognizant of that and do it as well. So they're seeing some delays, they're worried about higher costs. We're seeing shoppers not buy if they think it's international. So they're really looking for that domestic where they can trust the price, they can trust the promise on the delivery, and they're starting to switch what they're doing in their buying. So to overcome that, you can look at some in-country fulfillment, certainly a better domestic shopper experience so they don't know it's international. And then I think one of the things that's very close to my heart as well is the returns. Returns are very expensive. Shoppers will want a domestic returns experience, the ability to return that product. So what are some of the things that you can do right now that might help with that? So either you're shipping internationally or selling internationally or planning to. Just some very quick things that you can do, you can start to discuss. I think before I go through these three, I've heard a lot of people discuss changing your manufacturing, changing where you're manufacturing all your product, moving it to the US. I think that's a very difficult thing to do. It's a very long-term strategy. It's also very expensive. And so given the volatility in the rules and the legislation right now, a lot of people are not opting for that. So again, things like the right product data, as we mentioned, invest in good operational product data. Country of origin, you'll hear me repeat over and over again. A smarter fulfillment strategy. Look at in-country fulfillment, look at partners, anything you can do to get that product to reduce the amount of borders that it has to cross, and that'll reduce your tariff exposure, but also increase delivery speeds and a better promise to the shopper. And then most importantly of all, stay informed and be adaptive. Consult with experts in your own business. If you don't have them in your own business, consult with partners. Find experts in the industry. There are plenty there. They'll keep you up to date on the constantly changing regulations, help you reduce your risk, and improve your cash flow. So just to drill into the three of those in a little bit more depth, I did originally call this to have good product data, but someone explained it would be better to call it the right product data. So retailers have spent the last 10 years asking for operational data. They have a lot of investment put into PIM systems. They have product descriptions translated into hundreds of languages. They have a library of pictures of that product, but you ask them where the product was manufactured, you ask them who manufactured the product, or you ask them what the HS code or what it's made from, and they can't tell you. Now, the data in the systems, they just haven't spent the focus on it. And if you're going to grow internationally, it's something to focus on key. What we have seen is that accurate HS coding, which depends on the detail of the product, it can reduce your tariffs easily by 5 to 15%. Now, we're talking about international here, but again, even if you're just doing domestic business, chances are you're importing into the US. So the more accurate data you have for that import, the chance you can reduce down the duty that you're going to pay on the import as well. Having that operational data, as we explained, that'll mean smoother imports, less friction with customs, and product will flow smoothly. And then you get to protect your brand promise to the shopper. You promise them EDD, it might be an international shipping, but you can stick to that promise and it'll help build your reputation. A smarter fulfillment strategy. So again, consider in-country fulfillment and in-country inventory. That'll help reduce your exposure and deliver faster. Now, you may already have some of that. We'll see a case study in a little while I want to go through. That'll show of a retailer who understood they actually had some some other stock with partners, with distributors, with franchises and stores that they were able to leverage. But start off and keep it simple. Look at your origin to your key markets. And when I say origin, I mean where the product is manufactured and first shipped from, not where you're going to ship the last mile from. Look to reduce border crossings. Every time you cross a border, you're going to have to pay imports and duties and tax, and it's very expensive. Certainly for your outbound, look at in-country fulfillment. Again, we mentioned leveraging partners. If you have stores, if you're going to be a US organization, I've seen many over the last 10 years, they will take all of their international stock along with their domestic stock into the US, pay the duty and tax on it, and then ship it right back out when they sell it to someone in Europe or in Asia, and have to pay more import. Now, you can do things like duty drawback to claim it back, but it's very expensive to do. As I said, the key one for me is return strategies. People always forget about returns, and it's something we've worked on quite significantly in the last 4 to 5 years. Try and keep your returns in country. Average cost of a return from the EU to US is going to be greater than $25. It's going to take it anywhere from 2 to 4 weeks to get back, and every day that you don't have that product for resale, it's losing value. Keep it in country, look at re-commerce, look at re-fulfillment, even donation or recycle. These are all great strategies to keep the product in country and reduce down your costs. Stay informed and be adaptive. So again, partner with someone. Keep your ongoing compliance monitoring going. Adapt when you have to do it. Look at your HS coding and your calculations. Again, new market diversification. We have some clients that we've seen, certainly in Q1 after the initial ban frenzy, things started to slow down. So they see certainly their domestic market not growing as quickly as they hoped, and they're starting to look at key international markets where they can start to sell more product, and it's got high potential for growth. I mentioned pricing strategies here. What I mean by pricing strategies are several different things. We saw some research from the Fed a couple of weeks ago where I think 25% of companies were not going to pass on any tariffs to their end shoppers. Somewhere between 25% were going to pass on between 1 and 99%, and 50% of retailers were going to pass on all 100% to the shopper. Now, if you're manufacturing in China, at that stage, we're looking at 145% tariff, which is a real barrier to doing business at all. But things that you can do, shoppers are very aware of these tariffs. So one of the pricing strategies we've seen is that you can actually break out the tariff cost and show it as a subtotal. It's still going to cost as much. You might try to eat some of that profit yourself, but again, at least the shopper's aware of that. They're aware they're going to pay tariffs, and you're just highlighting it to them. I think the last one I'll call out on this slide is the cash flow optimization. Again, it's key to businesses. You can look at strategies like bonding. You take the goods in, keep them under bond, you don't pay the duty and tax till they're into free circulation. If you do take them in and you're shipping them internationally, you can look at duty drawback. Again, this can take time, but it is a way to claim back that initial duty that you paid to import the product. Then we also have RGR, which is returns good relief. So if you do ship out on those return goods coming back, you'll be able to claim relief for them to show that they're a return and that you're not re-importing the product again. So just to finish up, I wanted to go over a case study of a retailer I've been working with for the last 2 years, D Squared. They were very focused on international growth. They're an Italian apparel company, e-commerce and bricks and mortar, and they were really focused on the omnichannel, wanted to do very well. The challenge was the first time they attempted it, they didn't plan it well. It lacked the infrastructure for omnichannel. It didn't deliver the growth metrics that they were hoping, and there was a lot of operational efficiencies, so we had delays at customs, not a great shopper experience, and that led to low conversion. But the solution, as we talked about earlier, was that combined scalability technology, logistics services, and managing their trade compliance and getting that expertise. So they delivered a much better shopper experience. They saw better demand. They were able to use stock in stores that they hadn't been able to leverage before on their e-commerce platforms and their D2C. And they were able to improve their margins as well by having smarter fulfillment, by leveraging those stores. So it has been a journey over the last 2 years. I'm just going to walk you through what we've been working on them with. It started in Q4 2023. We launched out of their Italian distribution center. This is standard business, all of their domestic stock and then all of their international stock out of one DC. We were serving around 75, 76 countries at that stage. However, very quickly they realized that they had a lot of stock in stores in Italy as well. So they asked us to add in stores. So at this stage, we rolled out a ship from store product to allow their stores to part fulfill or whole fulfill orders internationally as well as domestically and mix that with what was coming out of the distribution center. This was done very quickly and enabled them to start to grow revenues. Immediately after that, and they do move fast, they decided to switch distribution centers from Italy to Germany. So again, they managed to achieve that without any downtime, no loss of stock, and still saw revenues grow, which was very interesting. And I think the key thing to call out was that within the first 3 to 6 months, their Trustpilot rating grew from 1.5 to over 4. And that was a significant change that really gave them the momentum to continue forward and keep investing in this journey. So the journey continues. Late last year, we added in stores in France and in Spain. Now, this wasn't just a matter of rolling out our ship from store product to additional stores. This stock is now owned by different parts of the group. So now we're dealing with multiple entities who can then all serve a single order to 76 different destinations. So this is a matter of it's different shipper, different exporter, and then even things like settlement, who's going to get paid for that product once it's sold. These are the things that we helped them continue to work out. It meant we had to track each individual article in an order, not just where the order had shipped from. But again, once we saw that, by the end of Q4, from when we started the journey, they saw a 13% increase in revenues. That was driven completely from the Omnichannel and from the store stock. Again, we just caught our breath on that one, and in 2025 now, we're looking at the UK and the US as well. Again, not owned by D Squared, owned by other parts of the family or by franchisees or partners. So we're now dealing with more multiple entities. So we've now got 5 different entities, 6 different origins. We're now settling in 3 different currencies, euro, sterling, and in dollar. One of the biggest challenges we had here was, what do we do with the returns? Who's the stock going to be returned to? Who owns the stock? What's the easiest way to do it? Now, luckily, Omnichannel did step in to help out a little bit here. We decided, for example, in the US, most of the product would ship from their distribution center in Germany, and then that would be augmented by stock from the stores in the US. However, all returns from the US, we return to the US stores. So that means to keep it in country. It's a very cheap returns option. There's a lot of complexity in making it sound simple, but there's a lot of complexity behind the scenes where we had to then work out who gets paid for that product, who gets credit, who's paying for the return. But that's what we do as part of our business. And again, we see a lot of growth in that, and I think we're moving into Switzerland as well. So overall, a 13% growth, a Trustpilot rating from 1.5 to over 4, and we're now gone from 1 origin to 6 origins, 5 different entities, 3 different settlement currencies in 76 countries to 20,000 shoppers. So it's been a great journey so far. I'm pretty sure it's not going to stop at this. As I said, they've seen such a success story out of it. They want to continue on with more. So just on the commerce next steps to finish up, and again, it's just to reconfirm what we talked about earlier. It's really about the right product data. Country of origin is key. It'll help with the HS code. A smarter fulfillment strategy. Explore in-country options, just like D Squared, making use of stores, making use of partners, franchisees. There are people out there that can help with it if you can't do it yourself, but certainly want to consider. And then stay informed, and most importantly, be adaptive. Consult with experts. Get the right advice. Things are changing very, very fast right now. Not only is the pace of it coming in, but as we said, the volatility where it may happen, it may not happen, it could be back on. You need to have something that's configurable and scalable, easy to change, and allow you to keep up. Thank you.
I think we have time for 1 or 2 questions. We've got
Okay.
a couple of minutes left.
Okay.
Hi, good presentation. Thank you.
Thank you.
My name is Karan, and I work with Nextuple. My company is in the order management space. We got asked a similar question from one of the clients we worked with when there was Food Safety Modernization Act about country of origin. And we work with, getting tax information, pricing payments. We work with these different systems. But the challenge there was, what's the system of record? Where do you store all these informations? Like, what's the country of origin?
Yes.
And, what are the tariffs with respect to that country? Because if you are displaying this information on the front end on the website, a real-time call needs to happen to that particular system of record.
So I come from a tech background, so we have built pretty much everything proprietary over the years. We've built a full distributed order management system. We've built a full duty and tax system. So we have our own accurate calculators. We have our own product catalog. So it's not a PIM. It doesn't push data to the front end. We do have that as well. We actually have an operational product catalog. So it stores the SKU, the product code. It'll store the country of origin, the HS code for a particular region. And then we have a couple of special tools that we built over the years that allow us to map that HS code to any HS code around the world. And we keep all of those accurate. So So I build out the product and we sell it, but behind the scenes we actually have a full trade compliance team, a full tax team, and a full financial settlement team. And those guys are experts in global trade, global settlement, and we kind of lean a lot on them. And all we're trying to do is to build the tools that are configurable to allow them to make those adjustments. But yeah, I spend a lot of time with them. You're right, on our checkout, that's where we do the initial calculation. So we try to make that as fast as possible. So we store a lot of that data close to those systems, and it ensures that you get a calculation pretty quick on checkout that you can stand over. And again, for ESW, we stand over that. We don't expect the retailer. If we make the calculation, that's our calculation. We have determined how much is merchandise, how much is duty, how much is tax, and that's something that we take all liability on.
Thank you so much, Nick.
Thank you very much.